The year is 2026, and the bubble hasn't just burst, it has evaporated. While the masses are staring at their red portfolios in a state of catatonic shock, a small group of elite investors is doing something different. History doesn't repeat, but it rhymes, and all indicators, from the inverted yield curve lag to the massive debt refinancing wall, point to this exact moment. But in this digital canyon of despair, two green pillars remain standing. Today, we aren't just talking about survival, we are talking about the ultimate wealth transfer.
To understand 2026, we must understand the land cycle. Historically, every 18 to 20 years, we see a peak in speculative fervor followed by a systemic reset. We saw it in 2008, we saw it in the late 80s, and the clock is ticking again. Total global debt has surpassed $300 trillion, and the higher-for-longer interest rate environment is finally cracking the foundation of the zombie corporations that have lived on cheap credit for a decade.
When the crash hits, the first thing to vanish isn't value, it's liquidity. You'll see high-quality assets being sold off just to cover margin calls on the junk. This creates a vacuum where even safe index funds drop 30% in weeks. Most investors will panic sell at the bottom because they don't have a plan. They are holding hopes and prayers rather than structural moats. You need to be the person buying when the blood is in the streets.
Common wisdom says buy gold or crypto when the sky falls. But in a true liquidity crunch, everything correlates to one. Gold can drop as institutions liquidate to raise cash. Crypto volatility can be stomach-churning. To survive 2026, you need companies that provide services the world literally cannot function without. Businesses with inelastic demand and massive cash piles that allow them to buy their competitors for pennies on the dollar. Before I reveal the two stocks, you must understand the Fortress framework. First, a debt-to-equity ratio under 0.5. Second, negative cash conversion cycles, meaning they get paid before they provide the service. Third, a monopoly or duopoly position. In a crash, you don't want growth. You want a fortress that pays you to wait. These two companies aren't just stocks. They are the new central banks of the private sector.
Our first stock is the world's most efficient logistics machine. It isn't just a retailer, it is a critical infrastructure provider. With a proprietary distribution network that rivaling the military's, this company thrives when inflation is high and consumers are desperate for value. During the last 3 recessions, their revenue didn't just hold, it accelerated. They have a cash hoard that allows them to remain aggressive while the rest of the sector is in retreat.
The secret to stock number 1 is their membership model. 90% renewal rates create a recurring revenue stream that functions like a tax on consumption. Even in a 2026 depression, people still need food, fuel, and basic staples. Because this company buys in such massive bulk, they dictate terms to their suppliers, effectively exporting their inflation and maintaining margins that competitors can only dream of. It is the ultimate defensive play.
The second stock owns the pipes of the modern world. Every business, government, and individual is now tethered to their ecosystem. If this company turned off its servers tomorrow, global GDP would drop by 50% instantly. They have more cash on hand than most sovereign nations. While AI hype might bubble and burst, this company owns the actual infrastructure that AI runs on. They aren't betting on the gold mine, they own the shovels, the land, and the air the miners breathe.
What makes Stock 2 the perfect 2026 play is their switching cost. For a corporation to move away from their software and cloud infrastructure, it would cost billions and years of downtime. In a crisis, no CEO will take that risk. This makes their revenue the most sticky in the history of capitalism. During a crash, they will use their $100 billion war chest to acquire every struggling AI startup for 10 cents on the dollar, emerging from the crash as a near-total monopoly.
Buying these stocks today is only half the battle. The 2026 crash will provide generational entry points. The strategy is tranche loading. You don't go all in. You set stink bids, limit orders at 20, 30, and 40% below current valuations. When the flash crash happens and the algorithms go haywire, your orders will fill while everyone else is frozen in fear. This is how the wealthy are minted.
Imagine it is 2027. The headlines are finally turning positive.
the market is beginning its slow crawl back. Because you bought the only two stocks that didn't just survive but consolidated their power, your portfolio isn't just recovering, it's at all-time highs. You didn't gamble on the next big thing, you invested in the only things left. This is the difference between being a victim of the cycle and being the master of it.
The window to prepare is closing. The debt cycles are converging, and the 2026 reset will be the most significant financial event of our lifetime. You can either be part of the collateral damage or the new elite. The choice is yours, but the clock is ticking. Subscribe and download our Fortress checklist below to ensure you are positioned on the right side of history. The crash is coming. Are you ready?